Hey gang, welcome to Time in the Market. Today I'm going to talk about Pfizer, the pharmaceutical company. These guys have done pretty poorly in the last 12 to 24 months after doing relatively well during the pandemic. Kind of weird that that time was such a boon for pharmaceutical companies, but it is what it is. They did use some of that money that they gained during the pandemic to reinvest in the business, but right now those seeds haven't really sprouted just yet, so we're waiting to see what happens there. And I thought it'd be interesting to take a look at this company, given how they're doing in the recent 12 months. You can kind of look at year to date; these guys are down 34%, 26% in the last year on the negative, 6% in the last 3 years. 23% over the last 5 years. So, really, this has been a terrible investment any way you look at it. There's been some periods of time where they've traded below where they are trading today, but not that far below. They are a dividend payer, so investors have gotten that dividend, but from a long-term perspective, this has kind of been a mediocre stock to own. And I'll sort of see if it's the case right now or if it's gotten to a point where it's getting interesting again. They are sort of at a turning point in their business. We'll take a look at what that means now. We'll walk through their Q2 earnings. Really, the pandemic was a huge boon for Pfizer, Moderna, and a few other companies, the ones that had a vaccine of some sort and some antiviral drugs. You can see that outside of COVID products, they're up 5% in Q2, but including COVID products, they're down 53% on the revenue side. Huge decrease simply because 21 and 22 especially was such a boon for them. The revenue soared by a massive amount. Their net income soared, their free cash flow soared, and they were able to do a lot of things with that money to try to reinvest in their business because they have some troubles coming up, and that's really why the stock is down where it is. That COVID boon is over. You're seeing a huge decline in vaccine revenues and antiviral revenues, and they don't necessarily have anything coming up right away that is going to make up for it. So they do tout some of their launches. Really, the big one that stands out to me is etrasimod. This is a drug they acquired through their acquisition of Arena Pharmaceuticals. Should get an approval in the next couple of months, maybe the first half of 2024. I think the assumption is that it gets approved. If it doesn't, that's a further negative for Pfizer, and you can expect their stock to take a further beating if that's the case. But I don't expect that to happen. You can kind of see that they're already launching some drugs. The thing with pharmaceutical companies is that this is a 1 in 100 type of business. You do a ton of research on a bunch of drugs, maybe 1 in 100 will get approval and actually make you a ton of money. Like etrasimod is probably expected to make a couple $1 billion over, become a couple $1 billion a year type drug. Maybe it happens, maybe it doesn't. Then you have, a couple more that get approved, don't really make a ton of money, and then a bunch that just don't make it past the testing phases. There's usually 3 different phases. If they kind of fail through some testing, the results aren't as good, they drop them, the FDA won't approve it, etc., and you make no money out of all the investments that you made. So really, they have a big pipeline. It's a big company. There's going to be a ton of drugs that they're studying. There's a ton of drugs that they have expectations for. I think now that the COVID boon is over, they really missed the weight loss drug bonanza. They do have a weight loss drug in studies, in phase 2 studies right now, but right now, Wegovy or whatever it's called, Ozempic or whatever it's called, they're making a ton of money for Novo Nordisk, and Pfizer just doesn't have anything there. So that's the next gold rush, and Pfizer is just missing it, right? The first gold rush was the pandemic. They had the vaccine, they had the antivirals. That's kind of dying down right now, and the weight loss drugs are in play, and they don't have anything at the moment. So a bit of a miss there on their part, but it is what it is. They're looking at what's next in line for us, because there's some risks ahead for Pfizer. You can kind of see that by 2025 they have about $52 billion in projected revenue that are non-COVID related. They're going to lose in the next 5 years after that. They're going to lose about 17 billion due to loss of exclusivity, so patents expiring, whatever. They feel like they have a replacement for that in the form of 20 billion from H1 2024 forward launches, and then they also have some business development deals, mainly the acquisitions that I talked about a second ago, that are going to generate about 25 billion in go forward revenue. So you're talking about potentially 70 to 84 billion in 2030 revenue, which is kind of mediocre if you think about it. Right now, this is a business that is expected to generate about 67, 68 billion in 2023 revenues. So they're looking out into 2030 and they're saying, well, our growth is going to be pretty anemic, right? It's not great. Now that 67 billion does include COVID stuff, whereas this doesn't. So if you think about it that way, it's going to be slightly better growth from that perspective because you've got 52 to 70 or 52 to 84, however you look at it. But there's some big unknowns in there, right? This is probably a known. You're definitely going to lose exclusivity on those drugs by 2030. So maybe that 17 billion is real, and this 20 billion here and this 25 billion here is kind of an expected assumption, because pharmaceuticals are a difficult business to get a handle of. Like I'm not in the pharmaceutical space. I'm not a doctor or anything like that. So I know what I know, but I don't know a lot. That's what I'll say. And as always, guys, this is not investment advice. Please do your own due diligence before investing in any of these stocks or making any investment decisions. So one thing they got out of the COVID-19 pandemic is they got a ton of extra money. They used that money to reinvest in their business, to essentially acquire companies with significant pipelines. Arena, Reviral, Biohaven, GBT were ones they made in 21, 22. Those, between the four of them, cost about 25 billion, something in that range. They have a few drugs in the pipeline that are looking promising. And now they also decided to acquire Seagen recently for 43 billion. That's still to be acquired. They're still waiting for approvals across the board, but if that goes through, that'll probably happen sometime in early 2024. But this is not a company that will change their fortunes immediately, right? They're paying 43 billion for a company that currently has about 2 billion in revenue, but down the line, they expect it to contribute about 10 billion in revenue from their drug pipeline by 2030. And that's kind of the interesting thing. You can kind of skip through all this stuff. You can look at it yourself. They do pay dividends. They have paused share repurchases right now. They've taken on additional debt for that $43 billion acquisition that hasn't gone through. That money is on their balance sheet right now, but will go out pretty soon in order to acquire the company when that approval comes through. Financial guidance for 2023, 67 to 70 billion, quite a dip from the 100 billion in 2022. That is mainly due to the decrease in COVID-19 stuff. And then EPS in the 3 to 3.5 range, 3.25 to 3.5 range versus something close to $6 in 2022. Again, big shift in their profits, in their revenues, because of the fall in revenue and income from COVID stuff. Going to skip all of the scientific updates. You can look at that yourself. Really, this business is all about pipeline. What is next? Because stuff doesn't have an infinite shelf life. Businesses lose exclusivity on drugs and they need to replace it with other drugs. So they have these drugs launching or launched or approved or what have you. Big pipeline coming after that. You can kind of see where their business lies, what their assumptions are for 2023, why their margins are going to be shrinking going into 2023 and 2024. And I'll talk about that soon. Revenue growth actually a bit lower than their prior guidance, some short-term headwinds due to some launches and then some, tornado damage in one of their manufacturing facilities, and then more expenses because they're investing in some of their pipeline programs, mainly due to acquired assets as well. And GLP-1 is that weight loss drug. So they have some promising candidates in that area, but who knows if it actually gets approved or not. It's still only in phase 2, so it's probably at least a year plus away from launch. And then you can kind of see some of their assumptions on the COVID side. They're estimating 24% of the people will take the new vaccine that just launched. They'll maintain 64% market share. And I think that's kind of a optimistic assumption. If you look at their last vaccine that launched, it was more of a 17% uptake. And then Comirnaty, or whatever it's called, does have majority market share. But if the population doesn't take the new vaccine formulation, like they didn't really take the last vaccine formulation, that's not really a good thing for them, because they are now charging more for that vaccine. Before, with prior to FDA approval, they were getting maybe $30-40 from the government for the massive amount of vaccine doses that they were selling. Now they're charging a commercial price of about $110 or so, which is higher than was expected. But if their uptake is a lot lower, the revenue is just not going to be there. But it still makes up 15 to 16 billion of their revenue or something like that, maybe even higher. Much lower than they had last year, but they're still making a decent amount of money from these products. And if this starts trailing off more and more and more and more every year, that's going to be a bit of a problem for them, because they are somewhat dependent on this to generate revenue and generate income. Not as much as they were before, obviously, because they were making a ton of money back then, and now they're making less money, but they're still hoping to make some money from these products. And then Paxlovid has a majority of the market share in the oral antiviral space. They're expecting about 112 million doses in 2023, which is just north of what they got in 2022. And again, if there's a waning immunity because less people are taking vaccines, maybe they'll issue more doses of Paxlovid, so there'll be one offsetting the other, that sort of thing. If we look at the business itself, like I said, not an amazing business to be an investor in. Really going back to, as far as this data has, you're essentially looking at a 1.7% annual return all the way back to 2005. There have been lower prices than you're getting today. Obviously, in the 2009 range, they were in the $13 range after a big acquisition during the big height of the recession. But since then, they've kind of floated in this $30 to $50 space. These prices you're sort of back to 2014 prices. You really haven't got much of a return besides the dividend. And the dividend's been relatively steady. They did cut their dividend in 2009, but since then, it's been growing. They didn't really suffer negative profits in 2009, but they made a huge acquisition of Wyeth in 2009 and took on a ton of debt, took out their dividend. Now they're making another sizable acquisition in the $43 billion range. Wyeth was closer to $70 billion when it was a smaller company. So maybe it's not as much of an issue, but they are taking on significant debt to make the acquisition of Seagen. So that's kind of the deal with Pfizer and pharmaceutical companies in general. They make massive acquisitions that they hope will pay off. Sometimes they do, sometimes they don't. And that's kind of the deal. You can kind of see, if you go on their income side, this is a business that's expected to generate 67 billion or so revenue in 2023. They had 65 billion in revenue in 2010, right? The revenue ebbs and flows depending on patents expiring, new drugs launching to market. Then that revenue fell for quite some time. It started rising again, and obviously 21 and 22 kind of reinvigorated their business, which was down into the 40 billion range after falling for quite some time, right? They haven't had a growth year for a while. Then their business exploded due to the pandemic, up 95% in 21, up a further 23%, more than doubling their 2020 revenue, their 2019 revenue in 2022. And now they're falling again a little bit. Now those pandemic vaccines, drugs are still a big portion of their revenue. They again be more of a 40 billion range business without those. So that's something to keep in mind. If that starts to trail off even more, that's a bit of a risk. If they don't have drugs to replace that, that's a bit of a risk. So if you look at their estimates, kind of where this business is headed, they're going to drop about 34% in 23. And then the market sort of expects them to ebb at that level and not really grow for a while, right? Their expectations are 70 to 84 billion in non-COVID revenue by 2030, but maybe none of that actually starts to happen until later in this decade versus at the start of this decade. On top of that, their margins are starting to be compressed. Now the expectations here are they're going to rise again. I don't think that's the case anytime soon. I think some of that is due to losing some of that revenue, investing more in the acquisitions that they've made, taking on substantial debt to fund that acquisition. If you go back to their overview, the enterprise value here shows that 211 billion is actually higher than that because they have 30 billion of cash on the books that is going to go out to fund that acquisition when it happens. So it's probably closer to 240, 250, which is what I'll show in my analysis. But almost a 5% dividend yield at this point. If you look at their valuation, just on a dividend yield basis, it's getting up there. Going back to 5 years, going back to 10 years, it's been higher before. It's been as high as 5.2%, but given the dividend growth and the price relatively, at a relatively low price point right now, from a dividend yield perspective, the valuation is there. If you're a dividend investor, we'll see if the dividend is safe or not, but their payout ratio is pretty reasonable. Their dividend is 160. They're expecting 320 in adjusted earnings per share, so in that 50% range. We'll look at it on a free cash flow basis soon. On a normalized next 12-month price over earnings basis, it's not as low as it used to be simply because the market didn't really adjust for what they were going to get due to the pandemic. But it's not bad, right? It's at 11x. The mean is 12.8x. So this isn't a screaming deal by any means, but it seems like a reasonable deal at this point. Jumping over to my handy dandy spreadsheet here, like I said, I have adding about 30 billion, 31 billion in debt to their enterprise value, closer to 240 billion at this point. And this is kind of an interesting business model because if you think about what they've spent on acquisitions, they're acquiring a $40 billion business. They acquired $20 billion in businesses just in the last couple of years. There was a $116 billion acquisition in 2000, a $70 billion acquisition in 2009. They did spin off Zoetis, which is their animal health division, in 2013. At the time, that was like $2 billion. Now it's an $80 billion stock on its own. So from an investment standpoint, if you've held it since then and you got that spin-off, maybe you've done pretty well if you continue to hold that. I do own Zoetis as a stock. I do not own Pfizer at the moment, but it's been somewhat of a value destructive company. If you think about the amount of acquisitions they've made, those acquisitions probably add up just to the market cap or even more than the market cap of the company today. They have bought back a ton of shares in the last 10 to 15 years. They're probably down about 30% since that 2011 acquisition or 2010 acquisition, where their revenue was actually higher than it's going to be in 2023, probably, or close to it. So weird business, right? They're so dependent on new drugs coming out. You don't really know what's coming up ahead, which is why I'm looking at this and saying I think I'm just going to go close to the estimates. I'm assuming that they're not really going to grow going forward. Sort of staying where they are today, all the way up to 2027. Could be worse, could be better, obviously, as it is with stocks. If you feel better about their pipeline, maybe this is conservative. If you feel worse about their pipeline, if you think some of the COVID stuff is going to drop off faster, maybe this could be optimistic because they don't necessarily have a ton of drugs that are guaranteed moneymakers, right? They do have that Estrama drug or whatever it was called. I've already forgotten the name. There's some, weight loss drugs in the pipeline. There are other drugs in the pipeline. If they acquire Seagen, those other acquisitions they had, there's certainly going to be drugs that are going to be there that they hope will replace their $17 billion that they're going to lose due to loss of patents, loss of exclusivity. But it's going to be a bit of a struggle in the next couple of years. And I think that's why the stock is doing what it's doing, why it's dropped so much. Looking at the dividends at a 5% yield almost, about $9 billion in dividends expected to be paid in 2023 against about $15 billion in free cash flow. So seems pretty safe. I'm assuming a 2.5% growth rate, which is in line with what they've had in the past couple of years. So if that kind of happens, you see a yield of cost of about 5.3% out to 2027 if you're buying it today, which good dividend. Seems like a pretty safe dividend. They haven't really cut it since 2009, but who knows what happens during a recession like that. They did cut the dividend in the last recession. Like I said, that was more due to a acquisition and additional debt than struggles within the business. If we go back to their net income side actually and kind of look at, well, are they actually, or let's look at free cash flow. Were they actually generating free cash flow all the way back to 2008? When the recession was happening? And the answer is yes, right? This is a business that almost always generates free cash flow. So to me, the dividend seems safe. If you're looking at it from a dividend perspective, it's probably going to be safe. But 5% isn't as amazing as it used to be these days, which is why some of these stocks have corrected. You can get a 2-year bond at 5.5% these days, or 5%, and you can get longer term bonds close to 4.5%, something like that. So again, this is still going to be better for that because it's growing. And if you feel 100% safe about it, you would take this any given day. But there's also the negative of the price potentially dropping more than it has. Also the positive of price rising if it continues to rise. So what I'm assuming here is, hey, 33% decrease in 2023, kind of on the bottom end of their guidance, 0 to 1% increases going into 2027. Margins in that low 20% range, which is kind of what they're expecting. And I'm assuming that it takes a while for them to get back to their goal of getting back to pre-COVID margins, which is in that 25 to 28% range. So I'm on the lower end of that scale, 26. Well, this is 25.8. So there was just a call the other day where they said, well, our long-term goals are to get back to those margins. We're not going to get there anytime soon, simply because we're making a Seagen acquisition, which is going to be negative to margins. We've made 4 other acquisitions, which are going to be negative to margins. Our revenues are dropping a little bit, and we're still spending money on R&D in order to get that pipeline going because we need to replace it as a company. If you look at their actual free cash flow yield that the market is giving it today, wrong divisor, 8%. Based on 2023 estimates, 13% based on 2022 actuals, but those actuals were just so high because of the pandemic that they're not going to achieve them anytime soon again. So I'm assuming 8% is the goal here. The market has generally priced this in that 6 to 8% range, sometimes going a bit below 6. That's kind of the norm for Pfizer. So if I sort of place my scenarios in that range, mostly 75% in the 6 to 7% range, 15% in the 8% range, 10% into the 5% range, and target a return of about 10% based on today's values and estimates, I'm getting a fair value of about $32.44 against a price point of $33.64. Now you can sort of say, well, you're assuming a 10% target return, but if you add the dividend to that, it's more like a 15% target return. So maybe that's a bit too conservative. If I go down to, let's say, 8%, if you're more comfortable with that, you get a fair value that's above today's price point. And that's perfectly reasonable. To me, this says this is a reasonable price for a stock like this. You're going to have a bunch of uncertainty. That's just the reality with pharmaceuticals. You don't know what their pipeline is going to turn out to be. You don't know what's going to get approved. You don't know what's going to take off. Let's say their weight loss drug gets approved and suddenly it's better than Ozempic and that's still all the rage and it's still working well. Maybe that becomes a blockbuster drug for them, generates, tens of billions of revenues a year for them for almost a decade, and that's going to just shoot the stock through the roof. Look at what happened to Novo Nordisk. Their stock is up 4x basically in the last year or two, mainly off the back of one drug. So there's a ton of uncertainty here. On the opposite side, you may start losing the COVID revenue faster. The commercial price point is high. Maybe insurers won't be willing to pay for it. Maybe the people won't be willing to take it as much as they used to. They're just over it. They're over it and they just don't want to move on. And maybe their revenue will fall off the cliff on that end. Maybe they'll start to decide that they don't want to invest as much as they do into coming up with new variations of the vaccine based on what strain is going around, et cetera. So that's something to keep in mind. If I look at this various scenarios from 5 to 8%, that's anywhere from 9 to 17% in total return, including the dividend, which is not bad, right? At today's price point, not bad at all. I think I'm aiming for 15% returns here, which is probably very optimistic given the history of this stock. A lot of that is going to be driven by the dividend, some assumption that the price is going to go higher, anywhere from a 2027 price point of $42 to $66, depending on what the market is valuing the stock at the time. I think the reality is going to be closer to the 7 to 8% yield if growth is as anemic as this shows. And it could get worse if they don't have a lot of drugs in their pipeline that are looking promising. And it obviously could get a lot better if some of the drugs that come out in their pipeline are looking good. I'm assuming 20% buybacks in the long run. They obviously pause their buyback right now. They're going to stop buying back shares, which is kind of a bummer given where the price is. This is where you would want to buy back shares. They were buying back a ton of shares in 2018, 2019, a little on the negative side in 2020, probably stock-based compensation, maybe some issuance of stock. Didn't really buy a ton in 21 and 22 as they were investing into acquiring other companies, but that was a good thing because their stock price was through the roof at that point. Not through the roof, but it was in the 50s. So it never really got a huge bump due to the COVID pandemic, simply because the market sort of knew that this was short term. And now that it's ending, it's on the downslope, the market's going back to historical norms, which is kind of in that $33 range where it hung out for quite some time, right? This isn't all that different from where the stock was in 2019, 2018, 2017. There was some uptake here. But in general, this is a stock that doesn't move a ton. So the fact that it's down, 30%, it's kind of an opportunity in my mind, right? This is, if you do want to own Pfizer for the long run, this is probably not a bad time rather to get into it. For me, I don't know. There's just so many uncertainties. I'm not super familiar with the pharmaceutical game in general. I don't know which drug is going to be amazing, which isn't. And I don't think Pfizer knows in general. Like, you can kind of see that this business is so all over the map, right? It's like, well, you are doing well because we have this one drug that's amazing and it goes off patent and we're doing poorly. And now we're doing well again because the pandemic came and now that's kind of gone and we don't have a ton of drugs and some drugs are leaving patents and we need to replace them. So it's that sort of business model that I'm just not amazed with. But if I was looking for a dividend payer, which I'm really not right now, I'm not in the age where dividend payers are all that appealing to me. This is a good one to have because they always generate free cash flow. And maybe they don't use it amazingly because they make acquisitions that don't necessarily generate long-term shareholder value. And we'll see if that's the case with the $60 billion that they're spending on the 5 companies that I talked about before. But at $33, seems pretty good. If you feel comfortable with even a 5% return, because the 5% return will give you a 5% dividend on top of that, meaning a 10% total return, you're looking at a very, very fair price today. If you're looking for more, even 7% up to 13% after dividends, you're still looking at a very fair price today. If you want more and more and more, obviously it's going to be a bit more questionable at that point, but it's certainly not a bad investment by any means. I think if this somehow keeps dropping and I see it at $29 or something like that in a couple of weeks, months, whatever, I'll be like, yeah, I'll maybe start a position. I'm not necessarily particularly interested in having more of the pharmaceutical space. I do own some AbbVie, for example, in my Dividend Aristocrats portfolio. But if it's an interesting value, and I think at $29 it'd be a very interesting value, right? You'd be talking about like a 17, 18% return at that price point, which it's kind of interesting, and you're getting a dividend that if the price keeps dropping below that, you can sort of wait it out, and eventually this thing might be at $50 again, and that's kind of when you get out. You've collected a bunch of dividends during that timeline while you wait for a next drug to hit, and you see what happens. If you're not really looking for immediate returns here and you're okay holding it long term and kind of waiting for something to happen, this is not a bad spot to enter, because there's probably been a ton of people that have been holding this for far longer and they've not really made anything out of it. So with stocks like this, you probably want to wait for a good entry point because they eventually reach it, and it's starting to reach it now, right? This is a pretty good entry point, and I wouldn't be shocked if people start buying soon. And if it keeps dropping a bit more because the market's pessimistic on their pipeline, because the data shows that the uptake of the COVID vaccine is mediocre going forward, and that is going to impact their bottom line, because now they're charging a bit more for that drug. They're still splitting the profit 50-50 with BioNTech, so it's not as much of a boon as it could have been if they had all of their profits from that vaccine, but it's still an interesting proposition at this point. And it's something I'll certainly consider if it keeps dropping. So let me know what you guys think about Pfizer if you're interested in the stock at this price point. Certainly an intriguing one, and seems relatively safe from a cash flow perspective. Like I said, buybacks are going to be paused, but once they ramp those up again, if the price point stays depressed for a while, could be a good opportunity for returns if they can get a good buyback yield there as well. I'm just not sure how long it's going to take them to deleverage. They didn't necessarily specify. They're going to have $50 to $60 billion in net debt after their Seagen acquisition. That's probably going to mean that probably 2 to 3 years of cash flow are going to go to just debt repayments to get their debt to EBITDA down to where they want it to be, because they're going to want to make more acquisitions eventually. That's kind of their business model. We acquire, we hope, and maybe something happens. And if you're okay with that business model, then Pfizer's for you, my friend. And today's price point is a pretty decent one. So let me know what you think. Leave some comments down below. If you like the video, like it. If you enjoy what you're seeing here, subscribe. I have more videos like this going forward. As always, I am not a qualified financial advisor. Do your own due diligence before making any financial investments. And thanks for watching, and have a good day.